Bitcoin public mining companies have been struggling along with the rest of the crypto market. With the decline in the price of Bitcoin, these companies have seen their cash flow decline, driving them to the brink of bankruptcy. However, while it seemed like the losses that public BTC miners have incurred have happened in the bear market run, it goes back even farther back. Public Bitcoin miners, both large and small, had grown in popularity over the last year. Their stocks allowed investors to bet on the crypto market without having to buy any of the digital assets themselves. Thus, these public miners have seen millions of dollars in revenue. The problem comes from the ability of these companies to actually retain their earnings over their lifetime. The retained earnings are how a company shows its total accumulated net income over its lifetime. In looking at the financial statements of these public miners, they are less than encouraging. They shows that most public Bitcoin miners have been unable to retain any of their net earnings since they were founded. An obvious problem with these miners have been how much of their earnings is being put towards administrative expenses. This report shows that compared to their counterparts in gold and oil and gas, Bitcoin mines used an average of 50% of their earnings for administrative costs. Additionally, these companies had committed to extensive expansion plans during the bull market that has become harder to pull off in the bear market. This has translated to a steep decline in the retained earnings of most public miners. Over time, there are some public Bitcoin miners that have been able to go against the grain and have their retained earnings in the green even during these troubled times. One of those is the Argo Blockchain Mining Company. In a report by Arcane Research, Argo Blockchain is listed as the only public BTC miner with positive retained earnings of $26 million.